This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
Crude craters. It was one of the ugliest days in the oil pits in years. Prices dropped more than 4% as traders continue to search for a floor in prices.
Slide snapped in the NASDAQ and the S&P 500. The Dow Jones Industrial Average closing just slightly lower. Will better than expected late-day earnings from one of the world's biggest chip makers, Intel, shape the trading tomorrow?
Good, but not great. Investors had been hoping the big banks would deliver signs of formidable growth in their earnings reports, but they may have to settle for something else. All that and more tonight on Nightly Business Report for Tuesday, October 14th.
Good evening, everyone. Stocks on Wall Street stabilized after a three-day sell-off, but in the oil market, prices tumbled. The price of crude posted the biggest one-day drop in nearly 2 years. On the same day, the International Energy Agency once again lowered its global demand forecast for next year. So if you want to understand the impact of a weak global economy, just look at these oil prices. Domestic crude fell over 4%, closing below $82 a barrel for the first time since 2012. Brent crude, the global benchmark for oil, also fell almost $4 a barrel, closing at the lowest level since 2010. Tyler?
All right, so why is oil moving down so far so fast? What's next for crude, for consumers, and for investors who own oil-related shares? Here with Insight is John Kilduff. He's founding partner with Again Capital. You again, I say it right?
I'm back. I'm live.
Nice to have you here. Very simply stated, why are prices falling as much as they are, as fast as they are?
It's a 1-2 punch, Tyler. Part of it is this slowing economy in Europe and in China, where demand for oil is key. But the other part of it is that the wheels are coming off OPEC. There's a battle for market share. They're looking at the price and staring into the abyss and saying, we're going to keep pumping and we're going to fight for market share. This is the Saudis saying this. This is the Kuwaitis saying this. And this is the Iranians saying this, interestingly enough. So this is combining to put tremendous downward pressure.
Where in the past they might have cut production.
In the past, just last year, the Saudis cut back oil production about 1 million barrels a day. They're not doing it this time around, and I think it's because they want to send a warning shot to Russia and Iran for what they're doing in Syria, but also to U.S. producers. The shale miracle that we've been experiencing, big part of this, and the Canadian tar sands, and the Saudis are drawing a line in the tar sands saying, you know what, we can produce much cheaper than you. Let's see how long you can hold on.
So, John, you're on record saying that you see oil prices going down another $10, so into the $80, high 70 range. Will that help or hurt businesses and the consumer?
It's fantastic for businesses, for transportation companies. It's wonderful for the consumer. Just like when these gasoline prices spike, it hurts consumer confidence. People buckle under and sort of, just stay home and staycation. They'll be hitting the road now, and it's coming just in time for the holiday shopping season where these extra dollars will be spent at the mall. It's incredibly stimulus. Now, people will get nervous that these falling oil prices are because of a slowing economy and a recession, but I got to tell you, the real big part of this story is the surging production, not the slowing economy.
I want you to elaborate on the point you just made. You say this is a shot across the bow by the likes of the Saudis and others to U.S. oil producers in the shale sands in North Dakota, up in the Canadian oil sands, saying, you can't keep up with us as we drive the price down. You can't get it out of the ground profitably enough.
That's right. Bit of a history lesson here, Tyler. The Saudis did this very thing back in 1998 when Venezuela was making a move on the U.S. to get market share here and to sell more of their oil here at the expense of the Saudis. Saudis taught them an expensive lesson, got oil back down below $10 a barrel. Same thing here. I think the Saudis saw their U.S.-bound exports fall to the lowest level in years. We're not importing any more West African crude right now, so that's Nigeria, that's Libya. So this is they're worried. So they're fighting for market share, so they're saying we're going to try to drive you out of business.
So OPEC, the oil cartel, has a big, important meeting next month, November. What headline might we expect from there?
I think the big headline is going to be that they are going to try to stand their ground and not cut production. Funny how history repeats itself. The same thing happened back about in 1993, to go way back. On Thanksgiving Day, they didn't cut. Oil prices collapsed.
Very quick thought on the oil stocks, the big integrated oils, the oil services company, the exploration and producers. What's going to happen to their shares?
You have to stay away. This oil price, the way it's going, Tyler, could put them under. Could potentially, some of them are very highly leveraged, a lot of borrowing. Their borrowing base is going to be eroded because of this low oil price. You have to stay away from it and get out.
John, thank you very much.
Thanks.
John Kilduff with Again Capital.
Well, despite lower oil prices, an influential Federal Reserve policymaker is downplaying global risks and focusing instead on U.S. inflation. John Williams, president of the San Francisco Fed, says the central bank should only delay an interest rate hike next year if inflation or wage growth fails to pick up.
Well, stocks came out of the gate with a bang today, then closed with a whimper. A trading pattern, the pros say, is a sign of a fragile, wobbly market. The Dow up as much as 143 points early in the session, ended about 6 points lower. The other key barometers did finish in the green, but gave back the morning's bigger gains. NASDAQ was up by 13, the S&P was up by 3. The yield on the benchmark 10-year Treasury fell to 2.206%, if you like to go out to the 1,000th placeholder there, the lowest close since June of last year. And just today, the noted fund manager Jeffrey Gundlach of Double Line Capital said that the 10-year U.S. Treasury bonds have now reached their lows of about 2.2%. Gundlach also said that any move under 2.2% on the 10-year could be a game changer for the Fed in terms of interest rate policy.
Turning to earnings now, just after the bell today, solid third-quarter earnings from Dow component Intel, which got help from increased demand for personal computers. The chip maker earned 66 cents a share. That was 1 penny more than analyst estimates. Revenue also came in better than expected and about 8% higher than a year ago. Intel's chief financial officer, Stacy Smith, says there were several factors for those results.
We're benefiting from a couple of things here. We've got great technology that's coming into the PC segment, so we're seeing growth at the high end, and we're also seeing lower price systems that are bringing back some share from tablets. And we're starting to participate in a wider range of devices. And then our data center business is benefiting from this growth of all of these clients that are computing and connecting to the internet.
Intel shares got an initial bump higher in late-day trading. Morgan Brennan joins us now from the NASDAQ with more. Morgan, you know our question. What's the one takeaway you see from Intel's earnings?
Yes, and it's a good question. It was certainly a positive report. Investors were really watching Intel's numbers very closely because not only does this kick off earnings for the tech sector, but Intel is the biggest chip maker in the world. This is something we touched on just last night on the show. In the past week, we've seen a dramatic sell-off in the chip stocks after another semiconductor company, Microchip, warned about slowing global demand and a correction coming for the entire industry. The takeaway tonight, we have Intel saying, nope, that's not the case, that in fact Intel's forecasting sales for the current quarter that are higher than analysts' current expectations. And what's even more interesting, Intel's stronger than expected numbers are tied to a rebound in demand for personal computers, which have suffered over the past several years with the advent of Apple's iPad. So seeing strong demand even in the current quarter for those chips, and that's relatively positive commentary about Intel's chips. But it's also something that's likely going to push the entire semiconductor group higher tomorrow, and also potentially push Microsoft shares higher because Microsoft's operating systems tend to run on Intel's microprocessors. Back to you.
That's a real switch in conventional thinking. Thank you so much, Morgan. Morgan Brennan at the NASDAQ market site.
Before today's opening bell, 3 of the nation's biggest banks reported their latest quarterly earnings with mixed results. Also mixed investor reaction. Shares of J.P. Morgan Chase slightly lower for the day. Citigroup got a 3% pop, and Wells shares fell almost 3%. Kayla Tausche takes a closer look at those bank earnings and what it tells us about the banking business.
Banks are a bellwether for the U.S. economy, but they're still waiting for their breakout moment. A trifecta of companies reporting today with few signs of growth. Citigroup beating estimates, Wells Fargo meeting them, J.P. Morgan missing. In the third quarter, J.P. Morgan saw its profits fall in nearly every unit. Total loans up just 2% from the same quarter a year ago. Much of the growth coming from loans made to high net worth clients in asset management. Any signs of life in investment banking were wiped out by a $1 billion legal charge the company signaled would likely go toward a future currency trading settlement. Over at San Francisco-based Wells Fargo, the mood was tempered but better. The bank met Wall Street expectations mostly because it cut costs to offset mortgage businesses that are chugging along at a slower pace. As the economy improved, Wells, like other banks, released funds set aside to cover bad loans to cushion its earnings. This time, it had less of that money to release. Citigroup had a bit more, which helped to boost the bottom line, along with above-average trading revenues and a surprise profit at its bad bank. But not all of Citi is rosy. CEO Mike Corbat acknowledging Mexico, its biggest growth bet, is getting costly.
I think we've made some meaningful changes to the way we come to work and think about things in Mexico.
Among those changes, disassociating with one unit of its Banamex business where more fraud was uncovered. A federal investigation at Banamex is ongoing. Citi's also shuttering its consumer business in 11 countries, including 6 countries in Latin America. KBW's Fred Cannon said those ambitions had been dragging the stock.
Citi, to be honest, has been a bit of a value trap for over 2 years now. We keep expecting a real lift. Is this really the beginning of the lift? Maybe, but remember, Citi has an awful lot of the global exposure folks are concerned about today.
Global risks, once the hallmark of big banks, will now be front and center as Bank of America, Goldman Sachs, and Morgan Stanley results come out this week. For Nightly Business Report, I'm Kayla Tausche in New York.
Also out before the opening bell today, Johnson & Johnson. Third quarter earnings shot up nearly 60% thanks to stronger pharmaceutical sales and sales of its new hepatitis C drug. But a stronger U.S. dollar and a weaker euro could hurt sales in the current quarter. So shares of J&J fell more than 2% today.
Still ahead, why more and more Americans are getting in over their heads when buying a used car and why that's so troubling. The Ebola crisis is getting some help, kind of, from social networking. Facebook founder Mark Zuckerberg and his wife Priscilla Chan plan to donate $25 million to the CDC Foundation to help fight the Ebola outbreak in West Africa and anywhere else that Ebola becomes a threat. And in the fight against Ebola, President Obama said today that more needs to be done.
The world as a whole is not doing enough. There are a number of countries that have capacity that have not yet stepped up. Those that have stepped up, all of us are going to have to do more because unless we contain this at the source, this is going to continue to pose a threat to individual countries.
He went on to say that the U.S. healthcare system is strong enough that an Ebola epidemic here is, in his words, highly unlikely.
Just 3 weeks to go before the midterm elections, and things are really heating up in one of the nation's most contested Senate races. John Harwood joins us now from Washington with more on the battle between Kentucky's Mitch McConnell and his upstart Democratic opponent, Allison Grimes. So, John, McConnell and Grimes, I understand, had their only debate. What happened, and why is this race so important?
What happened, Susie, was a really high-quality debate. You had both candidates offering familiar talking points. Allison Grimes talking about change and moving McConnell out after 30 years. McConnell saying she would be a tool of national Democrats hostile to Kentucky. Take a look at this soundbite summarizing both of their arguments.
Senator McConnell's 30-year record, it's gridlock, it's obstruction, it's extreme partisanship that's cost this nation a 16-day government shutdown. Kentucky, $127 million. We can't afford to go in that direction. My record speaks for itself. I'm an independent thinker.
Secretary Grimes' whole campaign has been designed to deceive people into thinking she's something she isn't. It's pretty obvious, given where her support comes from, all the anti-coal activists in the country, that she's going to do their bidding.
Now, of course, this race, Susie, combines two things. One, the battle for partisan control and the Senate Republican leader, but also the effort by conservatives, especially in coal states, to fight back against the administration's climate change agenda.
You know, John, not too long ago, most people thought that the risk for Mr. McConnell was going to come from his own party, from the right. Does this Democratic candidate have a chance to beat him?
She has a chance. She's not likely to beat him. McConnell has I would say, has a better than 50-50 chance. But this is a close race, and of course, both sides are focusing on turnout. They can change the shape of the electorate, both in Kentucky and nationally. That's what this last 3 weeks is going to be about.
But, John, let's just say she does pull it off. I mean, how would that affect the Republican chances for a Senate majority, number one, and their business agenda?
Big setback for Republicans if McConnell loses, not just for McConnell himself, because they're planning on the very difficult task of picking up a bunch of Democratic incumbent seats in states that Mitt Romney won. If they lose McConnell's, that just steepens the hill they have to climb to get there. And if Democrats hold the Senate, that simply means that business interests like the U.S. Chamber, which have been hoping for a new agenda out of the Senate leadership, are going to be frustrated.
All right. Thanks a lot, John. John Harwood in Washington.
Well, Domino's Pizza delivers better than expected results, and that is where we begin tonight's market focus. The pizza chain beat forecasts on both the top and the bottom line. Results were strong overseas and in the U.S., with same-store sales rising more than expected. Shares popped 11% to $84.30. Mixed quarter for Wolverine worldwide. The shoe company's earnings topped consensus estimates, but revenue didn't. The maker of Hush Puppies and other footwear brands also lowered its sales outlook for the year. The stock, nevertheless, rose 79 cents to $25.44. A setback for Pfizer's high-profile quit-smoking drug called Chantix. The Food and Drug Administration recommended that the drug maker keep a black box warning on the label. The controversial treatment has some severe side effects, including suicidal thoughts and erratic behavior. Shares of the drug maker off just a penny at $28.46.
Some executives are shuffling at Signet Jewelers to tell you about the CEO of that company, whose brands include Kay Jewelers and Jared, the Galleria of Jewelry, has resigned and announced he will also step down from the board. He'll be succeeded by the current president and chief operating officer. Shares fell more than 3% to $104.32. Now, as we told you yesterday, semiconductor stocks have fallen hard recently. But today, a few of those chip makers have turned around, and that's thanks to an upbeat forecast from Skyworks Solutions. This is a supplier for Apple. Skyworks raised its quarterly profit and revenue forecast, citing strength across all its businesses. The promising outlook sent shares of Skyworks up almost 8%, and two other chip makers, RF Micro and TriQuint, also rose by more than 3%. Airlines bounced back today, part of the rise being attributed to today's sharp decline in oil prices, which we just told you about. That, in turn, would put prices on jet fuel much lower. Following a turbulent month for the airlines, American Airlines surged more than 10%, United Continental, Delta, JetBlue, Southwest, as you see, all sizable gains today. And then after the bell, rail operator CSX reported better than expected earnings and revenue. This on an increase in freight volume across most of its markets. Shares have also been up on reports that Canadian Pacific is interested in a merger. And although the CEO wouldn't comment on that, he did tell investors that business is strong across the board.
We saw growth across all of our markets. Our ag shipments were up 13% this quarter due to the great crop that came in last year. Automotive was up 8%. Even our coal business was up 7%. So we saw broad gains across most markets.
CSX stocks rose initially in after-hours trading. During the regular trading day, shares were about 3% higher to $32.61.
Small business owners feel a little less buoyant these days. The latest survey of small firms by the National Federation of Independent Business found that owners are now expecting to see a slight pullback in both profits and sales in the current month.
Car buyers may be feeling less optimistic as well, and that's because even used cars have surged in price over the last 3 years, making them less affordable to more and more Americans. Phil LeBeau joins us now from Chicago with more on the trends in the used car market. This is really fascinating, Phil. A new study says that the average used cars now are so expensive that many people will become overextended paying for them. What's going on?
Well, it's a couple of things are happening here, Susie. First of all, this study, which was done by iSeeCars.com, they looked at about 25 million used cars for sale over the last year in 50 metropolitan areas around the U.S. And what they found is the average price is almost $20,000. And as a result, people are taking out longer loans. They're not putting down the proper down payment. And they really are stretching more than they probably would like in order to make those used car loan payments.
So, Phil, what are the ideal guidelines used for buying used cars?
Well, for a long time, everybody has said, look, it's the 24-10 rule, Tyler. You don't want to you want to put down 20% for the vehicle you're buying. You don't want to pay the loan off in more than 4 years, and you don't want to spend more than 10% of your monthly income. Well, unfortunately, few people are taking out loans that last only 4 years. In fact, the average loan now is about 5.5 years, and they are sometimes spending more than 10% of their monthly income when they're paying off those vehicles.
So does this mean that more people are going to lose their cars?
You would think so, Susie, but what you have is that people want to hang on to those cars if at all possible, even if they have to stretch. So we're not seeing the repossession as well as the delinquency rates really shoot up that much. In fact, they remain historically low. What we are seeing is that people are saying, what does it take to get my payment under $500 a month? Does that mean a 7 or an 8-year loan? Fine, I'll do that. Not ideal, but that's what people are doing.
Thank you so much, Phil. Phil LeBeau reporting from Chicago. And coming up next, the 6-month grace period on most federal student loans is coming to an end. But before you write the check, there are some payment options you may not be aware of. Details right after this. PIMCO, the world's largest fixed income asset manager, says it's not changing anything. Scott Mather, one of the 3 PIMCO managers now running its flagship Total Return Fund, says the fund is well positioned and that investors should expect no changes in strategy in the wake of PIMCO co-founder Bill Gross's sudden departure last month.
No, we're not changing the fund. As you know, it's been a team process here at PIMCO. I and my colleagues have been involved in forming those investment themes, which are at work in the Total Return Fund.
PIMCO also says the Total Return Fund saw more than $23 billion in outflows in September. That's about 10% of its total assets.
Okay, new grads, get ready to enter another rite of passage. The time is almost here for many of you to start paying back your student loans. For 2014 graduates, the 6-month period of grace on most federal student loans is about to expire. So it's time to get a financial plan. Sharon Epperson looks at some repayment options and the consequences if you don't pay.
It's the bill that I don't like looking forward to when it comes.
For 23-year-old Taman Turner, life after graduation means managing his own expenses, most of them. He admits needing some help on one of his biggest bills, his student loans.
I owe like 50 grand. I owe a lot. It's going to be, I realize that I'm going to be paying in for the rest of my life.
Turner received a bachelor's degree in broadcast journalism from Hofstra University in December. His salary as a radio producer in New York covers rent, utilities, groceries, and transportation each month, but not all of his student loan payments.
My bill can go anywhere from $400 to $600, depending on which bill I'm looking at. I'm on a payment plan. I don't know, my mom kind of set it up, the plan and everything. I contribute as much as I can. My mom kind of helps me with the rest.
The real problem when borrowers get out of school is their income is probably the lowest it's going to be throughout their lifetime. And also their student loan debt payments are the highest they're going to be throughout their lifetime. So they're really facing a cash flow issue. They don't have enough of income to pay both their debt payments and afford just standard living costs.
Underemployed or unemployed, many graduates may be unsure of how they'll pay back their student loan debt. So some don't. Most are unaware of their options, such as asking for deferment or forbearance on federal loans, applying for an income-driven repayment plan, such as pay-as-you-earn, that caps federal loan payments at 10% of your income, or refinancing private loans to extend the term and reduce the interest rate.
Many student loan borrowers are struggling to pay on time, adding significantly to the cost of their debt.
Of the total federal loans outstanding, about $1 in every $5 is past due, and nearly 14% of federal college loans are in default.
When a borrower defaults, they essentially get 16 to 25% collection costs tacked on to their student loan principal. So if the average borrower has $30,000 of student loan debt, when you add 16 to 25% to that, they're racking up thousands of dollars in unnecessary costs by defaulting.
Default occurs when you fail to make a payment for 270 days, which damages your credit rating and ultimately increases your debt burden even more. Turner, who started paying back his student loans this summer, doesn't want to miss one payment.
Once you miss it, it can become it's like any other bill. It becomes like a pain, a strain, and bill collectors calling you and saying, where are you?
Most important, he knows the consequences could be severe. For Nightly Business Report, I'm Sharon Epperson.
And finally tonight, a new study by consulting firm Mercer ranks the countries with the best overall pension funds. In the top spot, Denmark, followed by Australia and the Netherlands. China, India, and Japan are among the worst. You're wondering where's the U.S.? Right in the middle, getting a grade of C in the 25-country index. Not so good. Well, that's Nightly Business Report for tonight. I'm Susie Garrow. Thanks for watching.
And I'm Tyler Mathisen. Thanks from me as well. Have a great evening, everybody. We'll hope to see you right back here tomorrow.
Nightly Business Report has been brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
I'm Susie Garrett with a Nightly Business Report news brief. The price of oil tumbled today, closing below $82 a barrel for the first time in more than 2 years, as the International Energy Agency once again lowered its global demand forecast for next year. It was another volatile day on Wall Street as stocks gave back some early gains after strong earnings from Citigroup, Wells Fargo, J.P. Morgan, and Johnson & Johnson. The Dow lost 6 points after being up as much as 143 points. The Nasdaq added 13. The S&P rose by 3 points. The drop in oil prices helped beaten down shares of airlines soar higher after a recent drop because of the Ebola scare. And Facebook's Mark Zuckerberg is donating $25 million to the CDC to fight the Ebola outbreak. Be sure to tune in to Nightly Business Report right here on your public television station.